everyone. If you can hear me, let's make sure that I'm not talking to myself. Type something in. In fact, I'll start off with, what do you think I hear in the background since I'm sitting here at home? And yeah, I'm sitting here at home in my office. What do you think I hear in the background? Gonna give you one or two chances to take a guess on it. All righty. And it seems like you can hear me because kids, that's a good one. And yes, I could hear them. And thank you, Maud. And chickens. Yes, chickens would also be a good one, but I do not hear them. We moved the cows up to my area, so I hear the cows mooing in the background to be fed. Got to go drop off some hay for them, basically. But that's kind of interesting. All right. Hey, everyone. Welcome to the Trade Findings and Adjustments for, what are we? We're Tuesday, the 17th of September. To get started, if you're going to place a trade, there are three very important things to consider. What are they? What are the things that are very important that you should consider? The Fed, the Fed, and the Fed. I like it, but yes, FOMC rate meeting tomorrow. 100% agree with you. That's the first thing. Second thing, Triple Witching Friday. Oh, you are on one. Maud, what's the third thing you should pay attention to? Press conference at the end. No, press conference. I'm still gonna put in the FOMC. Anyone else? Third thing that any trade you're to place, you've got to pay attention to it. Tweet storm, I'll give it to Ida. What if I just said Middle East powder keg ready to blow? You have to be willing and understand that right now we have sentimental issues moving our markets. I like that we move down from we're locked and loaded. I mean, if you're locked and loaded, you're telling someone you're coming after them, right? That's just a stupid thing to say if you'd understand in any way, shape, or form what that sounds like and what that means to someone in the military. It just, ridiculous. Stupid. Stupid beyond belief to mention or say something that way. But it's nice to see that we're locked and loaded to I don't want war, but we have the best military ever. So sentimental issues are moving our markets, and that's something that we should be prepared for and ready for. It will affect it. It should affect in some way, shape, or form. It should affect your trade. And it could affect your trade. Not necessarily should, but you gotta be attention, you gotta be ready for it. So just something to be aware of if you're gonna place a trade. So plain and simple, what do you think? That's not fair. That was a bad question. Let me try that again. when you're thinking of a trade to place, what type of trade would you be looking for? So if you are going to place a trade, what type of trade would you be looking for? And there's a ton of answers here, right? Direction unknown until after the Fed. Perfect. So non-directional, right? Going from high volatility to low volatility. Agreed. Or at least understand if you want to do a debit spread that could occur. So to go from high to low volatility are typically credit spreads, right? Non-directional is the direction change from every nanosecond. Perfect. Longer term. Extremely short term. Lance, I like it. I like both of those. And I would agree with both of those because you've probably heard me say that. Placing the trade, right? Credit spreads, right? Or a bleed off trade. A bleed off trade where you want credit to bleed off, right? Time to bleed off. Pre-announcement with an adjustment ready to be placed. Debit spread, maybe after the announcement. What else can I think of? The short answer is yes. The short answer is yes. So this is where I run into the issues with an education that has to place a trade. Hey, Bill, I want to give you a call tomorrow morning, by the way. Let me know if that's okay. And I think, I'll be honest with you, I think it's kind of retarded that people are out there placing trades on a Monday. Not saying they can't work out, or on a Tuesday today, because you're in education, you have to come up with a trade. It would be smarter or better to wait till after the announcement. One of the biggest problems I see in trading, right? Well, there are two, but biggest problems in trading / investing, not patient enough and forcing a trade at the worst possible time, because you've, and I'm going to put me in there too, you've justified the potential, not probable, the potential profit. Happens all the time, right? Absolutely happens all the time. I've got some people that have a lot of cash. Kevin, why are you not getting more trades in? Well, because in all honesty, the probability of placing the trade isn't smart. Someone just typed in, sometimes it's better to sit on your hands. Someone just typed in, and I'm going to agree 100%. It's different when you're trading your own money. When it's a paper trading account, when it's one contract, put it on, no big deal. When it's your own money, it's kind of a big deal. So I'm only pointing these out to show the difference in the thought process of trading for an education and trading to make some real money. And I really hope, in fact, for those that are here today, there are 15 of us. For those that are here, I think I'm going to dip into the education side of things a little bit and offer my Monday and my Tuesday and Thursday trade findings as a cheap, like $99 a month type of opportunity to help more people. There's one other thing I want to point out. There should be a big difference in a trading account versus an investing account. I should take that back. It doesn't make sense again. Investment account. So trading accounts. What would you say in a trading account? What would be some descriptions? What is a trading account description? When you think about a trading account, what is a trading account description? Ooh, a bunch just came in. Shorter term trades. Spread trading. Smaller account. And I'm going to tell you probably somewhere between 10 to 25K. And Lance, awesome. Money you truly can afford to lose. And I know that's probably one of those, oh, you hear it all the time. Hey, if you're going to afford to lose money, you only trade the money you can afford to lose. It's a saying. A trading account is a high risk, high reward. That is a true account. If I could say other couple things, usually they're small, individual, but I would like to see a IRA/Roth with 20 years until the money has to be pulled. Meaning it's a smaller account that can transform into a trading account, into an investing account, but that you don't have to pay the taxes on it. Now remember, just because you don't pay taxes, it also means you don't get to write off the losses on the ones that go against you. So I do think it kind of evens itself out. Investing accounts. Give me the description here. It's an investing account. Interesting. Money set aside for retirement. That is definitely one to be looking at. longer term, maybe that's funny. Maybe safer. Collar trade, right? Love this one. An account with time to add shares. Maud, you nailed it at the start. Dave, I'm going to give it to you today, though. I really like those answers. In fact, you and Maud are kind of hitting all the answers I want to hear. Perfect. When you're trying to add shares for two reasons. Sell them off later and collect dividends. Maud, excellent participation tonight. Not to mention you and Dave have hit all the answers. So there's a little different thought process to how they go. So if I was looking today, if I was placing a trade tomorrow, I would go back to Under Armour. 100%. If I was going to place a trade tomorrow, I'd go back to Under Armour. Where is it? Come on, Under Armour. It's a trade we placed 3 or 4 weeks ago. We're kind of getting back down into a range where it fell through it before. It's held it with the help of the 200, held it with the help of the 200, held it with the help of the 200. I like the range that it's in right now. This almost sneezed there. This would be a thought process to be in a longer term trade. If I was looking at going to use this one, it's a longer term trade that I could get out of relatively quickly. And let's see if the numbers are going to work out for us. If I was to look at this trade, a 3-day trade would not work for Under Armour. At least not work for me, although it is at 2066. So in all honesty, let me redo this a little bit more. What is your expectation tomorrow from the Fed? What is your expectation tomorrow from the Fed? What do you think is going to happen? What would you figure on happening with the Fed? I'm going to say it's kind of a no-brainer, right? It's almost 100% expectation. 25% basis point, 25 basis point rate cut. Bingo. That's going to happen. We're going to have no movement till after. They're going to cut. It'll go down. It'll come up. It'll go down. For all intents and purposes, I would expect maybe 100 points on the Dow, 1/4 to 0.4% on the S&P to the upside, because the Fed is backing or making it easier for companies in our stock market. So if I was to look at Under Armour, and it would be a new trade, I would not necessarily do it with shares I want to get taken away, because I think there's some upside potential here. Next earnings are on the 4th. and I really want 80 cents to protect me down to the $20 range. So I would probably look at an October 19th, the monthly, 31 days. October 11th, 24 days. So what I'm doing is I'm looking at, hey, if it opens up at 2066 or right around 2098, I really like the 21. Last trading at 80 cents. There's a reason behind me looking at these numbers. Let's say tomorrow I'm going to split the difference. Let's say tomorrow we're down 18 cents. Or even at 2066, but that might make it better for me or easier for me, right? 13-cent drop today. Drop this position 9 cents. I'm trying to match up my credit with the $20, and whatever my credit would be would take the place of the 66, possibly the 98. I would, in an ideal situation tomorrow, if Under Armour opens at 2080 and I sell a September, right? October 11th. An October 11, 19, $21 short call for anywhere between 70 to 80 cents. I like the trade. It gives me credit to protect down to 20 bucks. If I could take my full credit, right? If I could get a cost basis somewhere in that $20 to $20.10, I could make 90 cents to $1, which in this scenario equals 4% or close to it, right? At least it better make that much. Let's see if I'm going to be right or wrong. 1 divided by 20, 5%. Holy Toledo. $0.90 divided by 2010. Yeah, 4.4 to 5% in 24 days. And that's rather important because if you take 360 and divide it by 24 days, you get 15. Where I could say you could annualize this 5%, you can annualize it to a 75% return for the year. I know, what a bunch of garbage. Because you wouldn't place the same trade on every 24 days because you have earnings and different stuff and different prices. So anytime you see someone starting to talk about annualized returns, you know they're full of crap. But a 4.4 to 5% to be out before earnings for 24 days, it's an amazing return. Adjustment. fall below $20 and add long put protection. November monthly at 20 bucks. And maybe it bounces all the way back up to 28 and you'll make $8 a share minus whatever it cost you for that long put, which is normally somewhere in that $1.60 to $1.95 range. And at the money long put out there 6 to 8 weeks. Pretty good trade to be in. Gives you time, gives you the speculation. It gives you both the best of both worlds, short term and long term. Or was talking with someone. I also like Costco. Now, I don't like Costco as much as I like Under Armour. But I do like Costco. And there's a reason behind it. The numbers work out. I don't know if they still work out, but they would work out for me even if we had a couple dollar drop on Costco tomorrow. This might be one I would place after. An after announcement trade. Costco, bull call. We have support down at 2180. Excuse me, 281. So I'd want to use support. And I would be looking for some figures on Costco, knowing that it doesn't have its next earnings is on the 3rd. So I'd be looking for a pre-run or pre-earnings run into Costco, but where I could still use the 50-day simple moving average as some protection. So actually, as I'm rethinking this, there might be 2 ways that I might put this trade on. If I was going to do 10 contracts, I might place 5 before the announcement and 5 after. But I would really be looking for Costco here, October 4th, 27th. So let me start with the 27th. I'd be looking for see my numbers. Short would be at 12.15. It's not going to give, well, you could get $6. That's funny. 12 minus 18, isn't that $6? So here's an interesting thing to notice. Would that be a smart bull put? Would that be a smart bull put to place? No. Hopefully it's a no, 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 no. Why? Excuse me, bull call. Bull call. Excuse, you're correct. Did I put bull put in here? Bull call. Sorry, guys. What is wrong right now with placing the bull? Costs more than you can make. Bingo. You'd lose money. A $5 spread that would cost you $6. Yeah, of course that's going to change, right? But it doesn't look good right now. So hopefully it's just a aftermarket problem. But you would need to be in that $395 bid. If you midpointed at $5, it could hit you as high as $605, which would, you'd spend $605 to make $5. That would be stupid. I would not like that one at all. But I wonder, what if we bought a little more time? Knowing you'd have to get out of it before the earnings that it's at, which would be at its highest. Doesn't have them in there. Why in the spread? Sometimes I don't like E-Trade when it doesn't populate its aftermarket options. So what I'm looking for that I'm not finding, I was going to tell you something along the lines about a 280, 275. And you'd want to get a net debit of about $4. That's what you'd be looking for. Of course, it's not getting filled. That kind of bothers me. But if I was looking to do something like this, I'd probably be October 4th. Ideally, you'd want the 280, 275. You could open up the spread, but it doesn't make a whole lot of sense. You'd be looking for a 280, 275, 280, $4 debit trade where you're looking to be out of it at 50 or 60 cents a profit, probably 60 cents a profit, probably 50 cents a profit. Really, it's going to be a 10%er. You want to get out maybe in 40 to 50 cents a profit that you can get out in the next 2 weeks with a run up on Costco prior to earnings. I will probably, with that said, I will probably have to wait till tomorrow till my options have filled to be able to put the trade in to place it online. But really, it's a 275, 280 bull call for $4, maybe $4.05. Trying to get out the 40-cent profit. No matter what, you want to exit the trade the day before earnings, which is going to be on November 3rd. You're getting out Thursday, November 3rd. If you stay in it that long, really ideally, the best time to get out of this one would be no later than the 27th of September. You've got 8 more active trading days and some time decay over that weekend for your short call position. It gives you protection with a technical 50-day simple moving average. It is what makes a 285, a 282.50 actually. As you saw me look at some numbers, you don't have all of the protection, but I did look at a 285. $282.50, a 282.5, a 282.50 down to a 27.50. You have $7 there with 450-ish almost. Let's do a quick math. Maybe I'm gonna like this one. What if you could set this one up? $750, and you'd be spending $6. 95, 35, and 40 to the upside, 35 for the upside. So you might be able to get by with 595. The problem is you could have, well, I guess it doesn't matter, does it? That would be dicey. That would be dicey. But a maximum profitability of, there we go, 4-to-1 risk to reward. Current theoretical price is 5.9. Oh, that's never mind. Maximum loss 222. What am I doing here? Call. You know what? There's something wrong with this one too. Yep, I know what's wrong with it. Nope, I don't know what's wrong with it. Pretty interesting. If you look at the snap, by a 380 vertical call limit, I don't have a 380, so pretty interesting, guys. I'm kind of using this to teach you a little bit. Some people blindly follow the garbage that these people have online. There's no way you could lose 226,100. There's no way your maximum profit's 58,000. It's a buy a 380 call vertical limit. Oh, it is possible because I'm doing it on every single account. So I'm sorry. Let's take one more look at this a little different way. Crying out loud, Hurley. Use your brain. Sometimes I'm brainless. October 4th. I'm sorry, guys. Not thinking this one through all the way. I saw 595 is where I'd go with it. Different snapshot analysis. I like it. I like where we're at on this one. I like where we could go with this one. This is the one that I'd be doing. It gives you a little bit of protection down there, but it gives you a better reward scenario. This one I might only try to make, you know, a quick 400 bucks, 450. I'd be doing the order ticket, and I might put 5 on at the beginning of the day and 5 on after. I don't have to get too greedy in how I do this, but this is the one that I like that has a pretty easy ability to fulfill this order. And I do like the snapshot analysis. I do like the probabilities. This could be one on a bull call position that you're doing nothing than doing the pre-earnings run, and Costco's been doing nothing but knocking it out of the park. So I'd stick with a little bit of risk going above that 50-day simple moving average. I'd probably put 5 on and then another 5, and I'd be looking at a 275, 282.50, knowing I've got about $1.30 of possible risk, trying to make as much as $2.50. $1.50 of risk is nothing more than looking at my 281.15 holding against a 282.50 that I'm trying to have a maximum profit get called away. Any questions now that I screwed that one up and trying to explain it to you? Any questions on that one that maybe I made a mistake in going through everything with you guys? Are you on board? Are you on board? I just confused the crap out of everyone. All right, so this would be the one, and I'll put in everything here, and I should get this posted first thing tomorrow morning. But the trade is pretty easy. I like the metrics, and it's one that I might put in as early as half in tomorrow and then half in after the announcement. And there you go. Guys, have a wonderful evening. I appreciate you spending the time with me. Don't forget risks that we're running on trading right now. We have the Fed. We have a possible Middle East war. Anyone remember the third one? Triple Witching Friday. Remember those things as you're expecting to see a lot of movement in the next week. Guys, take care. Pleasure being with you tonight, and I look forward to seeing you Thursday morning. Bye-bye.